At last Friday's Stock Talk, Robert asked me if I would be willing to teach the platinum and the gold members of our tribe how I find these stocks that in the past have given some exponential growth returns. As I said, we all understand how NVIDIA and Microsoft and Google and Apple and Meta are going to fit in, and even Broadcom, and some of the stocks that own the tech space, how they're going to benefit from artificial intelligence and how they're buying the GPUs. But how do you find stocks like you've found for us in the past, like Vertiv and Marvel and Modine and SoundHound and Chart and Skywater and SITM and CRDO? How do you find those stocks? And I shared with him that I find them by studying their financial statements and their balance sheets and looking at those statements and balance sheets and figuring out which are the stocks that have found a growth opportunity that is kind of told through their financial statements. And so let me show you what I'm going to. I decided I needed to make a lesson plan. So let me show you what I've created in the form of a lesson plan and see if you don't agree or understand how I'm going about it. I believe, and that's what this says here, is that a company's objective is to generate revenue, and then its ultimate objective is to generate profits. So the first thing I look at is what is the company's revenue going back usually to at least 2020, maybe even before that, and finding what's their revenue, is their revenue growing, and if it is, at what rate, and then what is their projections of revenue over the next 3 to 5 years. And from that, I can say, is this a company that is growing in the future, and at what rate? And if the company continues to grow at that rate, what is the price going to be? And then how does their earnings per share relate to their growth in revenues? Because you can have growth in revenues, and if you aren't bringing it to the bottom line, the price of your stock is not going to go up. So where do I get this information? And here I'm showing, as I say, this is my lesson plan. I go to their income statement, and I look at their revenue, and I look at their operating income, and I determine, are they on a growing path? Then I look at their balance sheet and look at some key points on the balance sheet, particularly relative to the number of employees that they've had in the past and they're having in the future, or more recently, because, and also what is their debt situation? Because I learned in the school I went to, put on by Goldman Sachs for small businesses, is if you're going to recognize a growth opportunity, or if you're going to grow, you're probably going to have to take on some debt, and you're probably going to have to hire some employees. So those are tells, and usually there's a lag time of taking on the debt, building up, and hiring employees until the price goes up. So you can go back to 2020 and 21, 22, 23, and say, are they increasing their debt? Are they increasing their employee count? And if they are, let's dig deeper. Let's find out more. And so where I then like to go is, what are their projections for their revenues and their earnings for the coming years. And you get this information basically by attending their earnings calls. Now, I'm looking at a stock that I'm creating this lesson plan for, and you can see they were showing some tremendous growth projections, and then they dropped. And I had to find out, why are they dropping? And what is the scenario here? And what I found out is they sold a major part of their business back in 2023, and now they are gearing up for a new part of the business totally built around AI. So they recognized they had a saleable business that part of the business was not going to grow at the rate that they wanted to, and they sold off part of their business and then projected some tremendous growth. As you can see here, in 2024, because of the sell-off, their revenues were dropping some 90%. Then in 2025, the revenues are going to go up 400%. 2026, the revenues are going to go up 2,417%. Then level off in 2027 at 58%. So now I have to figure out what exactly caused this, and what's their cash position, and how are they going to proceed in the future? So the next thing I do, after looking at the income statement, after looking at the balance sheet, after looking at the consensus of revenue and earnings per share growth, then I look at the chart. Because now what I'm trying to do is figure out, where is the buy-in price? What is the relative strength index telling me? What is the MACD telling me? What are the resistance points? What are the support levels? And where do I want to buy into this to take advantage of the growth that I'm foreseeing? Then what I do is come back and say, okay, if their average growth is going at 170% per year over the next 3 years, and their PEG ratio is all the way down to 0.22, and their PE ratio is 37 with a current price of $36, what is the fair price of the stock right now based on if I had a PE ratio and a PEG ratio in line? PEG ratio is very low. PE ratio isn't that far out of line. Well, I would say, based on that, the fair price today is $107. Well, then I go to Wall Street and I say, what do you believe the fair price is, Wall Street? And they say 51. Then I say, okay, what if the price between now and 2027, 37.5, grows at the same rate over the next 3 years as the earnings per share? Well, now that price is going to be $3,294. Is that realistic? Probably not. Well, okay, then let's look at it another way. If we projected that their earnings are going to be $4.89 in 2027, and we give it the PE ratio equivalent to the S&P 500 historical PE ratio, what's the price then? Well, it's $122.25, which would give me a return from today through the end of 2027 of 239%. Now, what do I believe? It's somewhere between those two. Okay? Which either one, I'm okay. So then I say, what is this company all about? And I do a deep dive. A deep dive is a podcast which I create after researching numerous articles and numerous descriptions from and press releases and earnings calls from the company in question. And I basically create a podcast, and in 15 minutes, it explains everything that the company does, its past history, why it had that drop in 2023, and why it's projecting for the growth going forward. That's my lesson plan. That's what we're going to discuss probably Thursday evening, somewhere around 7 o'clock Central Standard Time, with everybody on our platform who is in the gold and the platinum level. Now, if you want to participate in this call, all you got to do is go to the link in the description and sign up for the free trial on the gold, and then you'll get an invitation in the email that will invite you to this closed session. It's going to be on our Discord, and so there will be question and answer opportunities as I go through and explain what I believe this stock is going to do, and explain all these numbers and who we're talking about and what the future holds. This is how I analyze stocks. I think I'm going to make this a regular occurrence on our Discord, that once a month, I'll come in and say, hey, this is a stock I found that I think has some tremendous potential and can give us the kind of returns that we've gotten from some such as Vertiv and Marvel and Modine and Soundhound. So that's what we're doing. If you'd like to participate in it, I'd like you to participate in it. So go to the link in the description, sign up for the 14-day free trial, come to our meeting this week, see if it meets your expectations. If it does, then let the 14-day trial turn into a monthly deduction of $19.95, and I think I can pay my way. Hope to see you later this week for our session, our closed session for our gold and platinum members on how to read a financial statement to find your next growth opportunity.